Sean, are you coming to the CMT?
Yeah.
Good. Let's get sexy.
Oh, getting sexy. What's happening, everybody? It's your boy, Chicago Sean McLaughlin. I'm the Chief Option Strategist at All-Star Charts, and joined with me, as always, Steve Strazza, our Head Technical Analyst. How you doing, Strazza?
Doing well. How are you?
Good. How's the weather down there in Miami? It's spring break time. Are the beaches starting to get crowded?
Well, it's funny you say that because my neighbor had like his son and 8 friends over. So that's how I know that it is definitely now spring break this weekend. And yeah, it's starting to heat up. The weather is warming back up, which, I don't love, but sure, it's fine.
I misspoke. You're not in Miami. You're in Key West.
Yeah, but I will be in Miami tomorrow. So
that's right. You and JC are going to be out there, and you guys are hosting a little happy hour in Miami, if I'm not mistaken. Is that right?
yeah, let me plug it. Wednesday night, I believe 5 p.m. at the Wharf, which is right on the beautiful historic Miami River. So come join us, hang out, come talk stocks, crypto, options, whatever. We love that stuff. So yeah, we'll all be there.
Awesome. I didn't get the invite, so I won't be there. But I also live far away, in fairness. So, all right. So, hey, this is the Flow Show, and this is the show where Strazza gets an opportunity to stump me by surprising me with interesting, unusual options activity, and we're going to talk through it and see if there's some trades that we may or may not want to put on. So we should probably start every episode with this, just a little background of what unusual options flow is. Straz, I want you to give everybody the high level of what this report is that we're looking at.
So basically, we are looking at the prior week's option splashes. They could be bullish or bearish bets. Really, the way that our scan works, and this is not a fully automated scan, we have people that are actually looking into it using their discretion to include or not include things, because as you know, Sean, especially when you're reading the options tape, a lot of hedging activity, a lot of strategies that might have multiple legs. So you can't just pay attention to one, a splash in one contract. So what we're really looking for is options that have either, that aren't very optionable, have low liquidity in their contracts, or just options that aren't seeing much, that see a significant splash relative to their open interest. So pretty much everything on this list, if you look at the 2 last columns before the return information in our table, you'll see the contracts that were traded that got them onto our list, and then whatever the open interest was before those trades. So just going down from the top, you'll see something like 1,000 from Fuel Cell. There were no contracts traded in that entire. There was no volume in that entire contract up until this splash. Then you see 1,900 contracts in Lee Auto. There were only 655 was the open interest before that splash. So you're going to see stuff come onto this list where they are seeing totally unusual volume compared to what they're used to seeing.
Right. And the important point here is, and you alluded to it earlier, you said, we don't know if this is a hedge. We don't know if this is a speculative bet. We don't know if this is, an insider acting on insider information. We don't know that. And that's not information that we necessarily need for us to decide to place a trade. But really, what this is doing is it's kind of like a little cheat code. It's like, hey, it's surfacing these ideas to our attention that somebody's taking big positions here for some reason, and maybe we should look into the technicals here and see if there's a trade that aligns with what we're seeing in the underlying options, right?
It's really just another filter. Yeah, like you said, we do our best to make sure that the stuff on this list was not due to hedging activity, but we don't know for sure. There's so many different ways to skin the cat. We don't know what kind of positions these options market participants already have in place. So it's impossible to literally say that for 100%. What we do know is that there was some extreme interest around these names and some very large bets made on these contracts that give us the, kind of light bulb to say, go look at what's going on. What's that chart look like? It's just another filter that says, hey, maybe you should take a look at this. Maybe this should be on our list.
Right. And for those of you who are interested in the inside baseball, what goes on at All-Star Charts behind the scenes, when we get together as a team and talk about ideas, this is an example of the process we go through, right? We look through scans, we look for things to surface ideas, and then we just we go back and forth. Like, okay, what do we like about this? What don't we like about this? Which trade do we like more? Like, do we like this one or do we like this one better? And so what we're going to do here, and what we do on this show, is you're seeing the raw example of this right now. I'm seeing this follow the flow report for the first time right now. Strazza's seen it. He knows what's there, but I'm seeing it for the first time right now. And we're going to look through some ideas here. We may or may not put a trade on these ideas, but this is how it starts. This is the process. So let's get into it, Strazza. What are some names on this list right now that really are jumping out at you?
I'm going to read through a few names. Let me know what themes stand out. Okay. Electrical equipment, that's fuel cell energy. Li Auto, which is an automaker. Rivian, another automaker. Nikola, another automaker. Hertz, rental and leasing for autos. Then we have stuff like Cleveland Cliffs, it's a steel stock. We have Mosaic, agricultural inputs stock. We have some resorts, Melco, Wynn.
Well, it sounds to me like there's a lot of action going on under the hood in the auto industry. Is that the theme you're picking up there?
You got to, right? I mean, Nikola, Rivian, those are two but they're poor man Teslas, I guess. Are they?
That's right. Yeah. And they've all been beaten down really bad over the last 6 to 12 months, right?
They've been completely thrown out, just like everything else in the growth space. These are some really.
And so the options activity you're seeing here is on the call side, yeah?
Yes, everything I read was bullish flow. Yep. So it's all calls on the offer. Sometimes we see some puts on the bid, but yeah, all calls on the offer.
So this is interesting, Strazza, because if this was just one name, right, and we saw this bullish call activity, then it could be anything, right? It could be a hedge, it could be a speculative bet, it could be insider trading, it could be anything, right? But the fact that we're seeing a lot of names that are directly or indirectly associated with this industry, that tells me that some big players are putting on a big sector bet, and this is one way that they're doing it, right?
Sean, that is such a great point. Yeah, totally. So like I alluded to before, we can do our best to make sure that, the transactions that make it so that the stocks that make this list are not hedges. Will we miss some? Sure. We can't control that. But seeing 3 different names from the same industry, maybe 4 if you include Hertz, yeah, there's something there. You can't. I doubt that was all hedging and that we might have missed something or didn't know something.
Is there an ETF that plays this more directly or no?
So to me, this is mostly autonomous. It's like EV stuff because I'm seeing Nikola and Rivian. So I would say cars. I think it's CARZ.
CARZ.
Yeah.
Okay. Let's see if that has a liquid. I'd be willing to bet the liquidity here is not all that great. So I'm looking through the options chains right now, and I'm not seeing. Well, let me look this way. Yeah, I mean, look at this. I'm looking at April options in cars. You can see on my screen here. I mean, look at the zeros in the open interest column here on the call side and zeros in the open interest on the put side. Now,
which is why you're probably seeing so much activity because they tried to hit multiple vehicles. Probably it's like they're making an ETF for themselves.
They're creating their own ETF. Okay, so playing this via an ETF is probably not the best move. So let's look into some of these individual names. Let's look at, what was that? Nikola. Let's look at Nikola real quick because I know they've got some pretty liquid options. Okay, so let me pull up the chart real quick. The stock's trading at $7. The implied volatility. So if you could see on my chart here, I hope you guys can see the bottom of my chart. I've got this blue line here is the implied volatility trend of the options, right? So implied volatility tells us, how much premium options makers or traders are inputting into the prices. And when this line is high or trending higher, that means people are paying up. They're paying up for premium. That means options are expensive. That means you really got to get a big move to happen if you're just buying a call to be bullish or buying a put to be bearish. So I always like to pay attention to the implied volatility. That's literally the first step that I do when I'm considering, well, maybe it's the second step. The first step is deciding, am I bullish or bearish, right?
Yeah.
Do I want to be on the long side? Do I want to be on the short side? Once I've decided that, then the next thing I do is I look at implied volatility and where is the options? Because if implied volatility is at the upper end of the range where it's been over the last 6 to 12 months, then I want to be either a net premium seller. I want to put a position on where I'm a net seller of premium, or I want to be doing some kind of spread that will offset what will inevitably be a mean reversion in the implied volatility in options, because implied volatility tends to mean revert. That's like the one thing that we can count on in options trading is that implied volatility, we don't know when, but it always tends to mean revert and go back to lower normal, quote unquote, normal levels.
Is it fair to say that, so look at a chart like this, right? This is a nasty primary downtrend. If you do finally get that dead cat bounce that a lot of people who are betting on bullish options are obviously trying to, are suspecting we will get in the future, wouldn't you see a short-term increase in the implied volatility, usually on some sort of dead cat bounce move?
You would think, but here's the thing about the dead cat bounce, and this is not universally true every time, but when a dead cat bounce move happens, and it's kind of why they call it a dead cat bounce, is because nobody really believes that it's going to be sustainable. It's really just like all the people that were our long holders or investors are just kind of like breathing a sigh of relief. Oh, the pain is over. Finally, this thing's been going down every day for months. Finally, I could breathe easy. Meanwhile, the people who are aggressively short, they're probably in the process of exiting their positions, reducing risk. Maybe they're completely out. And so people really aren't getting all that aggressive. In fact, they're all just kind of collectively catching their breath. So in that scenario, options premiums are generally going to come down. Okay. Where you generally see options premiums going up is before the dead cat bounce, when the thing's just knifing lower because people are scared and they're using options to protect their investments in most cases, or they're positioning for that dead cat bounce that they think is coming, so they're buying calls, and that will raise the thing. But during the dead cat bounce, like we've already seen, I think people just are kind of calming down, coming back to center.
That makes a lot of sense. What you're speaking to is like the sentiment of market participants. On a dead cat bounce, it's almost like, well, they were anticipating or expecting that move. So you're not going to see, any unnatural rise or increase in implied volatility.
Right. So now looking at Nicola here, if I wanted to make the bet that the bottom is in, and I wanted to take a flyer on the long side, I'm looking at the implied volatility, and we had a recent spike, which is kind of weird. I don't love this action we had about, was that 2 weeks ago? Don't love that, but where the implied volatility is now, it's even if you X out this little spike we had a couple weeks ago, we're still relatively high over where we've been for the last year. So I would not look to buy straight calls in this situation. Maybe what I would do is buy a bull call spread where I'm leveraging the high premiums and the further out of the money calls. So let's open up an options chain here real quick. And, let's say I wanted to go into the summer. Let's give us some time. Let's look at June options. That's 3 months of expiration.
And am I looking at, where's the open interest here?
The open interest, oh, sorry. I have to go to my Analyze tab. Now you'll see it. Let's open this back up.
Nicola has an options market. This is a very optionable stock, right?
Right. These are there's plenty of liquidity in these options. I mean, usually the dead giveaways you'll see up here, we have a bunch of weekly options listed.
Yes.
They will rarely list weekly options for a stock unless it's already a very active options market. So that's the cheat right there. It's really easy to figure out.
You'll only see monthlies.
Right. So if I wanted to take a position here in Nicola, I definitely wouldn't just buy calls. I mean, because think about it right now. If I bought this 7 strike call, let me highlight it here. Here's the bid, 138. Here's the ask, 156. I'd probably get filled. I'd have to get filled somewhere in the middle, maybe around 145, 150 is probably where I can get filled, right? But 150 plus the $7 strike, so that's The stock would have to get to 850 before I can break even. And I don't know what that math is there, but that's like a 25% move, more than a 25% move just to break even by June expiration. I'm not saying it can't happen. Of course it can happen, but that's a tough bet to make.
I mean, look, when we look at this chart, not the kind of stock that we want to put a bullish bet on, even for a dead cat bounce. There's no clearly defined level that we can trade against. We've talked about trading some junky stocks, or what I would call like the trash trade in names like DraftKings or Square or even ARK itself, where we have like the pre-COVID highs. Like if you look at my chart, we would have the pre-COVID highs to bet against. Here, I mean, if you look at Nikola, their all-time lows were the COVID lows in March 2020. We took that level out end of last year, early this year, made a swift move lower in late January. And we've been going sideways for the past, month and a half, almost 2 months now. This is a bearish continuation pattern. As technicians, we have to err in the direction of the underlying trend and assume or anticipate that this will resolve lower. Sure, if it fails and resolves higher, then that'll be something to pay attention to, but that's not the bet we're making here.
Yeah, I mean, basically, what it appears to me is that somebody or some group of people are making a bullish bet on this sector as a whole. And maybe that bet is, they're like, hey, this thing's just beaten down so much it can't go any further. Why not position for some upside? Maybe they know some underlying, changes in the fundamentals in this sector that you and I are unaware of because we don't pay attention to that kind of stuff. But yeah, I mean, this is not a bullish bet I want to make. And if I was forced to make a bullish bet here, I definitely would be doing some kind of spread, because the options and premiums are way too high right now, mostly because people are probably scared that it's going lower versus going higher. But either way, options premiums are elevated. So if I, gun to my head, if I had to make a trade, I'd be doing some kind of bull call spread, or selling naked puts is what I would do here.
Let's look at two that we do like. So another theme that has stood out, and I feel like people who watch this show are probably sick of hearing it by now, but commodity stocks. We've been talking about them every week since we started doing this. Me and Alfonso talk about them every week for the past 2 quarters now, because that has been like the main overriding theme for our Follow the Flow list since late last year. This week, 2 really stood out. That's Cleveland Cliffs and Mosaic. Sean, we've talked about trades in the fertilizer agricultural space before. I know we have Corteva. We've also talked about industrial metal setups. I know we just did Nucor last week, which is actually holding up really well. Glad we went with Nucor instead of Freeport-McMoRan. It's been much more resilient the past few trading days. But Cleveland Cliffs kind of falls into that mold. That industrial metals. They do a number of different things, not really just one commodity. They have exposure to really, the broader pro-cyclical commodity space, which is nice, especially for this environment. And I really like this chart. You can see that, we went sideways for a while. This is a nice consolidation. We actually shook lower.
We can't see your chart, by the way. Put your chart up.
I was looking at yours.
Oh, you were looking at mine. Okay. My bad. All right.
Let's look at it. So we have like so many charts look like this. And in the lower pane here, this is what we love to do. We are huge fans of relative strength. So that's what you're seeing in the lower pane. That's Cleveland Cliffs relative to the S&P 500. Why? Because we always want to know who the leaders are. When you're investing in leadership or outperformers, you have asset managers chasing that performance and basically creating a tailwind for you. So that's really just a great strategy, one that's proven very well for us over the years. So when you look at Cliffs, we ran higher into 2021. We started chopping sideways for a while. You can see this little range here. And then recently, you can see this little breakout from this range. What I love about this is that we had the little failed move down here, shook lower, and then ripped higher, retested the lower bounds quickly. And then we really haven't looked back. Now we're pressing on the upper bounds, look like we're resolving higher. One thing that I always love to see is when you look in the lower pane now here, in the relative trend, you could use this as as pretty much like confirmation, right? So the relative trend making new highs and breaking out of a similar range as the absolute trend here is basically like supportive of a breakout or supportive of new highs in the absolute price chart. One of my favorite things to see. So I really like this name for a bullish setup. What are you seeing in the options chains?
Yeah, that I like everything you're saying there. The relative strength is kind of. I mean, I was already convinced, but once you show me that relative strength, that's really nice. So let's dig into the options here real quick. I mean, well, before we do that, on my chart here, again, always looking at the implied volatility. We are not at the highest levels we've been over the past year, but we're also not very low either. So that takes long calls out of the equation for me. So probably going to want to do something else. So let's go into the options chain here and see what we see. Now, what kind of time frame and what kind of target are you thinking about here? By the way, if this thing starts to move.
Listen, like with Chevron, I know that was a unique scenario. We went very far out, but this is a brand new bull market for these stocks. They've been beaten up for a long time. Now, not only are they breaking out on an absolute basis, they're breaking out on a relative basis. This thing could last for a few years. So when you ask me time frame, I say as long as you're willing to go.
Well, my comfort level, I like to go between 6 and 12 months out, usually for my aggressive bullish bets. And so I'm looking at October here, which is, what's that, 7 months from now? Look, there's a lot of premium being priced into the out of the money options. Let me actually expand this options chain a little bit so we can see more. Oh, they only list options up to the 40 strike in October. But you can see there's a lot of premium being priced into these out of the money options. Now, like for example, when I typically want to buy, if I wanted to buy long calls, I generally like to buy the 25 delta strikes. I feel like the 25 delta strike gives me the nice mix between affordability and leverage.
Right.
And I'm looking at the 25 delta strike, and because implied volatility is so juiced in this name right now, we got to go all the way out to the 40 strike, which is $15 above where this $25 stock is trading right now. That feels like a really far way to go. And the premium, we'd have to pay about $1.50 to get them.
Yeah.
I would rather be a seller of that strike. And so my initial thought here is definitely bull call spread. Maybe we buy the, I would maybe even buy the 25s. It'll give us a better odds of success here. Buy the 25 strike, sell the 35s. Why not? Cut our cost in half. So if I did that, that spread would cost, if you could see here on my platform, it would cost about $288. It's called $290. It would cost us $290 to get into that spread. Okay. And that basically means the most we can win is $700 here. The most we can lose is $290. And all it has to do is get to, I mean, if Cliffs threatens to get to the 35 area, which if I bring up the chart, I mean, I don't feel like 35 would be that much of a stretch if this long-term breakout that you're talking about happens. We would have a pretty good opportunity to profit in this trade. But more than that is all it really needs to do is be above, let's say, $27, which would be new highs from here at least. And this spread will definitely start paying. So that's probably the way I would play that, Strazza.
And I mean, people listening are going to say, wow, 35, that's kind of a long way from here. It's almost like 40%. Listen, we've seen it time and time again. We've been buying these commodity stocks for, better part of a year now. When they go, they go. So 40 is not out of the question. It feels aggressive. I don't love that strike, to be honest. But listen, this is a primary uptrend. We went sideways for a year. There's a lot of pent up demand, pent up energy. You would expect we get some sort of nice, up leg if this base is really resolving higher right now. Whether that puts you at 35 or $40, I don't know. But you should see a nice gain if this is really a valid upside resolution.
Right. All right. So this is a trade we're going to keep an eye on, Strazza. Not sure if we're going to put it on, but we'll keep this in the hopper and see how things shake out. Maybe if the volatility comes down a little bit without the stock giving up too much in price, maybe we play with long calls. But I think that's a good place to stop now. We don't want to go too long on these shows. But hey, ladies and gentlemen, this is just kind of an inside peek, a look behind the doors of how we come up with trade ideas here at All Star Charts and how we go through the process and the things that we look for. So I hope this was instructive to you. Strazza, thanks for the great ideas and thanks for the help as always. enjoy that spring break weather down there, buddy.
Yeah, always a fun time. I'll talk to you next week.
All right, everybody, take care. We'll see you next time.